And we're live. What is going on, guys and girls? Good morning, good evening, good afternoon. Welcome back to the channel. And in today's video, we are going to be covering off on how the fucking bottom is in for crypto. The bull market's back. It's cancel your plans, dump your side chick, lock the fuck in season, right? We're going to cover off on a bunch of different charts. We're going to look at the Bitcoin chart. We're going to look at why I think that the bull market is back, what levels I'm watching, how I'm eyeing off high conviction setups, and also how I was able to capture Hype, Link, Pump Fund, Solana, ETH, Zcash, and a bunch of other altcoin breakout plays using one of my strategies, specifically the breakout strategy, and how I believe that whilst I'm almost out of all of those positions, apart from Hype, Pump, and Link, there is going to be some fruitful opportunities in the cryptocurrency market in the coming weeks or months ahead. And if you haven't figured it out yet, you need to lock the fuck in. If your plan is to trade crypto, you need to lock in. So we're going to cover off on a bunch of stuff today. I'm going to give you guys some thoughts on what I'm watching, and we'll go from there. So let's get into it. So the BTC chart is actually pretty easy to break down. Obviously, we've got this daily time frame over here in the top right. We can see here that BTC has been rallying from these lows around this 62K region all the way up to where we are right now, around this 78 to 80K region. Now, there's a few significant higher time frame levels that we've broken through. This particular one here, this was the first potential breakout trade. Two previous highs, been capping price since June, range-bound price action, bang. Bullish engulfing close to the upside. You could have got long right there and just TP'd all the way up, and you would have been fine. We haven't had a pullback. When crypto runs sometimes, it runs and it doesn't come back, and that's exactly what happened here. Secondarily to that, we have also had another breakout above this level right here. This is where Saylor sold. Michael Saylor sold BTC for the first time on the 1st of June, and that's what led to this liquidation cascade. Well, not liquidation, but this bearish sell-off here of 20% down to 59K. That was Michael Saylor, Mr. I'm never selling crypto, never selling BTC, selling his BTC. He then sold even more BTC in this region, which, to be fair, I thought would have a more bearish response than it did. But markets didn't really price in the bearish sentiment, or they already had priced in the bearish sentiment to Saylor selling even more BTC, and no one really cared. So we kind of just chopped around a little bit. Then we sort of swept this low here, led to this push up to the upside, didn't make a higher high yet, and kind of just chopped around. And that's messy. And for me, that's like dead set, no trading zone. This is interesting. The breakout above these two highs here, this is interesting. Then we've continued all the way to the upside, all the way pushing us up above this 72K region, 74K region, up to here where we're sitting now. Now, really, the trigger for me for the bull market being back, well and truly, is going to be this weekly time frame. At the moment, we are still in a higher time frame weekly bearish trend. What do I mean by that? Well, I've got three easy to define levels on the weekly time frame that would constitute towards a continuation of bullish sentiment with the Bitcoin weekly chart. One of them we haven't got to yet. I'm watching BTC for a breakout above this 82,875 region. You know, it's an elastic band, so we'll call it 83K. Basically, BTC above 83K is going to constitute towards the first weekly swing high or higher high in a very long time. We've got a lower high and then a lower low. If we break out above here, we're going to have a weekly higher high. If that constitutes towards a subsequent weekly higher low and a continuation, it's showtime. For me, the trigger for showtime is going to be a break above there anyway. I personally am not going to wait for a retest, and I think that we're going to have an impulsive move to the upside if and when BTC breaks 83K. So everybody's kind of like, oh, you know, we're late to the party with crypto, but, you know, the measured move has already occurred, all this shit. It's all bullshit. We're still in a higher time frame downtrend. If we make higher time frame breakouts and we make a weekly higher high, there's going to be some savage opportunities in crypto. So for me, this is kind of my bull market's back trigger. I want to see a weekly higher high, a breakout above this recent swing, or the last swing high on the weekly time frame. And if we get that, which I've drawn in here on this daily time frame, if we get a breakout above here, for me, it's go time. Until then, I'm still in positions. I can break down a few of them after this, but I'm a little cautious. I'm happy to not take anything in here on BTC, and it's going to cost me 4.7% to find out if I'm right or not. And if I am, then I'll take breakouts above here, which I'll talk about in a minute. But for the BTC chart, that's what I'm looking at. The monthly close for August is looking amazing. If we continue like this, it will be, if we closed right now, it would be the highest monthly close since basically the beginning of the year. It looks good. It doesn't look perfect. It's got a little bit more grinding to do. And this daily deceleration, if this is the beginning of a rollover and we do see a pullback, I would like to see that pullback decelerate and form a higher low pretty soon. I would not want to see higher time frame levels such as 74K, the Saylor selling level at 72 region. I don't want to see those lost. If we see those lost and we retrace all the way back down inside here, I would be more inclined to think we sit in a range and we get stuck in that range. So that's what I'm watching for the BTC market. Now, high conviction setups and how to trade them. This kind of goes hand in hand with me breaking down my current positioning, which is pump, link, and hype. I am out of everything else right now. I was in a few other trades, but they had later entries than pump, link, and hype, and therefore I didn't want to hold them through this chop. So I TP'd about 20 or 30% of them, rolled stops, got tagged out of some of them 2 days ago, tagged out of another one yesterday for break even. So capping my downside on those ones because my other entries are much better. So let's break them down and let's get into it. So I was in a pump fund long. Well, I am still in a pump fund long. I was in this trade right here, and I can break down this trade, why I took it, which kind of constitutes towards one of my strategies, which is the breakout strategy. So let's have a look. So on the daily time frame for pump, I was looking at this swing high here from back in May. Price has been capped here since basically February. Significant swing high here. I wanted to see a breakout of that swing high, which we got on the 4th of August. We had a nice bullish engulfing close here, as you can see on the daily time frame, leaving behind a little bit of a gap. Bearish high test rejecting 0.0025, followed by a gap fill, 382 fib rejection, lovely break and retest. That is textbook. Higher time frame break and retest of a significant swing high, bullish market structure breakout to the upside, lovely bullish engulfing close, complete gap fill, deceleration at the fibs, at support and resistance flip. That's a long trigger for me. I entered this on the lower time frame, so it's a hybrid trade, lower time frame execution, higher time frame analysis. That is what is enabling me to get very good risk to reward on this. So I took this on a 15-minute 50 EMA break to the upside right there. Now, some of you may be thinking, well, how can you take a lower time frame entry with such conviction on a higher time frame trade? It's about stacking confluence factors together. It's about the SR flip. It's about the bullish engulfing close. It's about the gap fill. It's about the 382 fib rejection. It's about the fact that if we now put some fractals on this, this horizontal blue line right here is that higher time frame support and resistance that I'm seeing flipped on a daily time frame. So on the lower time frames, when I see us push into this higher time frame support and resistance, then I see us sweep it and close with a low test, a bullish low test. Then I see us fail to make a new low and make a higher low, and then I see us push to the upside. Coming into London session, little bit of volume, not huge amount of volume. Coming into London session, 15-minute 50 EMA break to the upside. I'm happy to accept the risk on this trade because if we roll over and we make new lows underneath this high time frame support and resistance, then my trade thesis is invalid anyway, and I no longer wish to be in this position. So stop loss underneath 0.5, halfway between 0.5 and 618, gave me a little bit of breathing room. Not a huge amount, but a little bit of breathing room. Reality is if we'd lost this low throughout the day, I probably would have manually cut it. We didn't lose that low. I didn't get a chance to do anything with it really in terms of management. Once we broke above this level here, which is this previous swing high on the daily time frame, /1 hour, 4 hour, etc., I TP'd 10%, rolled stops, moved my stop loss to break even. Now, that trade has obviously continued gigantically to the upside. I have added to this position at key levels. So I added to it once we broke above this breakout level. Why? Because it's the next point of concern for me here, 0.00325 region. We've got this swing high here on the daily time frame, major break above there. And once we get above that level, I'm looking at this next. So I've got huge risk to reward to the upside. I've got a 50% move on pump if this high gets broken. So once we broke this high on the 15 or the 30-minute time frame, I forget which it was, I added to my position size quite substantially, bringing my average entry up. My stop got rolled to 0.025, I think it was. Yeah, this other blue line here, that's where I rolled my stops to. And then once again, we've continued to impulse to the upside. We have now decelerated at this level, but it's kind of just, you just draw level by level. Just go level by level. At the moment, we're rejecting this level. We've sold off a little bit. I've got a great entry, so I don't really need to over-manage this, to be honest. I'm probably 60 to 70, maybe even 75% out of this position now. I'm just selling into these impulsive candlestick moves here. All the time we're having big moves to the upside. So there's not really much for me to do in terms of management here. This has obviously turned into a gigantic risk to reward position, which I'm not going to take credit for and say that I was sniping a 25R trade straight off the bat, because that's just clickbait bullshit. I didn't. I thought I was taking a 4-hour breakout trade, and that 4-hour breakout trade, daily breakout trade with a lower time frame entry got me a little more than I bargained for. So I'm still in this position, but it's a good example of outperformance. Right now, everybody's looking at oversold alts that have good risk to reward back to all-time highs. I don't believe that's a profitable strategy for this bull market. I believe that strategy is going to fuck you up, this bull market. I don't think that's going to work. And there's a few reasons why. It's because outperformance in the market has already shown its hand. Therefore, why would you chase underperformance just because it has good risk to reward? To me, that does not seem like an intelligent thing to do. So again, slightly different scenario. Daily breakout strategy on hype. I took this on a 4-hour bullish engulfing close above this daily level here, and basically exactly the same thesis. 4-hour bullish engulfing close. I took this on a 15-minute bullish engulfing close above the 4-hour breakout that I was watching to see. 4-hour bullish engulfing close above there. I then scaled into that on a retest, targeting up around these recent highs here, which I obviously then removed and stretched my profit target because I realized what was going on. But in hindsight, I didn't know that this was going to elicit such a big move. I just took this because it aligned with my breakout strategy. On the 4-hour time frame, I even got the opportunity for a retest. So it suited my one of my strategies. So I took it. I didn't realize that hype was then going to come up and make new all-time highs. Bitcoin is still in a weekly bearish downtrend, and hype is making all-time highs. If that's not an indication of where the outperformance is for the next 6 months, I don't know what to tell you. I really don't. That is the trigger. This is the definition of outperformance. Has it pulled back? Not really. No, we're kind of still grinding here, and that's why I'm still in this. I don't really have much to do in terms of management. I've TP'd a bunch of this already. My stops are rolled in profit. Yeah, unbelievable trade. Again, like 10, 15R. I would have banked 50R in the last week, which is crazy. And I don't like advertising the whole big risk to reward, but like when you're capturing all the moves and you're focusing on the outperformance, the big risk, and you're entering on lower time frame execution with higher time frame analysis, you get good risk to reward. And I still think we're early. If BTC makes a new weekly higher high, we're absolutely dancing. It's lock the fuck in season. It's cancel your plans. It's dump your side chick. It's don't go out on the weekends. It's fucking lock in season. Just come up for some oxygen. Link, kind of similar thesis, breakout trade, stop loss below the drive candle, a little bit of room underneath here. Again, not much to be done in terms of management. Stops rolled, continued to move to the upside, significant higher time frame breakout there, and we've now rejected this $12 region. And to be honest, it kind of looks a bit shit. If I had to look at all three, which is the one that I'm least confident in, Link is now the one that I'm the least confident in. But I've got such a good entry. Stops are rolled. I'm mostly out of this position. I'm going to leave it and see if it plays out. Maybe if it retraces to here and rejects this and we lose this level, I'll probably cut it. I'll probably cut it there. But apart from that, they're the three live positions. I was in a Sol long. I was in a Zcash long. I was in an ETH long. One of the ones I want to cover is ETH, because ETH higher time frames looks better than BTC higher time frames. We are sitting at a bit of resistance here around this region. Also got the weekly 200 EMA in this region. However, look at the ETH weekly. We have made a higher high on the weekly chart. There's a shit ton of resistance here, but we've made a higher high. We drop this down onto the daily time frame here, and what do you see? Well, I've got support and resistance at 2420. There's a little bit up here at this wick, 2460 region. That, to me, looks like a higher time frame, break and retest of the 2400 region. We haven't lost it. It's still maintaining a bit of relative strength. It's a little choppy and it's a little messy, but the higher time frame structure is still intact. And we have made a weekly higher high, which BTC has not made yet. So I am watching for a BTC breakout above 83K to add confluence to 1, 2, 3 of my existing live positions and an ETH long from 2400. I think ETH is the high beta trade if BTC breaks 83K. So that is my focus. That's the other position that I'm actively looking to get into if we get better conditions. Now, there's been a few things this cycle which you could have used to your advantage to help you in your bias, right? One of those things is what occurs when I'm on the wrong time frame there. One of those things is what occurs when you have a liquidation flush. Let's have a look at this on the lower time frame pump fund chart. So, regarding outperformance, being able to spot it and knowing when to capitalize on it, an example of that is right here on pump fund. So on Saturday, I don't know the number, 130 billion or whatever it was. No, sorry, 130 million in liquidations on the crypto markets in this little candle here. Pull it on the 5-minute chart. Right there. I've already drawn it in, right? Now, something to look at for this coming cycle, which is very, very important, is what happens after a liquidation candle. In this case, there's a swing high prior to the liquidation dump. Right there. It's not a very good line. You get the point. There's a liquidation dump. Bang. 20-ish% flush in 15 minutes. Followed by a reclaim, dallying the dip into new highs. Right there. There's your fucking green light. There's the green light. Sure, oh yeah, we bled it. Yeah, we bled out a little bit and we chopped around a little bit. But there's your invalidation. If we retrace the whole move into new lows, run as fast as you can. If we had retraced this move into new lows, I would have cut my pump fund long. But we didn't. We had nice relative strength. And once again, we dallied the dip into new highs. Cool, so let's just draw another little line here. Right? And then what eventually happened? The same day, 9:30 p.m., Saturday, new highs. Oh, yeah, but then we came, zoom out. Then we made new highs again. Then a low. Then we eventually made new highs again. Yeah, then we came back down to here. Yeah, but we're just retesting all of this price action in here. We haven't made new lows yet. Pushed up into new highs again. So that initial liquidation dump that we've just drawn all over, that was then reclaimed into new highs all the way up here. And right now, we're still sitting above this candle. There's the swing high from the liquidation dump right there. We rejected it this morning. So, my point is, this is how you find outperformance. This is how you filter outperformance. And this is how you look for outperformance. Don't listen to all these morons who are telling you that the risk to reward for some low liquidity altcoin is good to the upside. That is shit advice. That has worked well in previous market cycles. I do not believe that that is going to work well in this cycle. And I've managed to catch just about every decent move to the upside in the last couple of weeks. I've caught a couple of breakout trades in addition to the ones I've shown you today, which I've aggressively TP'd, rolled stops, and been tagged for break even, capping my downside. I believe that this is the strategy that will perform the best in this coming market cycle. It is one of two strategies that I trade. The other one is head and shoulders patterns, which was formulating my bias for some of these reversals, specifically on hype. I was anticipating hype yesterday to sell off, but it's got so much fucking relative strength that didn't play out. But one of the strategies that I trade is a head and shoulders strategy, which is a little messy, but there's a head and shoulders pattern there. And that bearish engulfing close there looks like the beginning of the sell-off into these lows. Let me see if we make new lows, and then I may reassess how I manage hype. Didn't happen. Dally the dip right there. So what am I looking at now? Same thing we just talked about. A couple of equal highs here. I'm looking for new highs above there, which would constitute towards an all-time high breakout, while the rest of the market tracks sideways, while BTC is still in a higher time frame bearish trend, downtrend. Haven't made new highs yet. And hype is at all-time highs. There's your outperformance. I've given you a few examples of it. I still believe the bottom is in for crypto. I'm waiting for a couple of triggers in order to solidify that bias. But I said it before. I said it twice. I think the bottom's in. I think this is the beginning of much better conditions. I think we're still very early in terms of the potential setups. I think you've got to be picky. I think you've got to be selective. I think you've got to focus on the outperformance. And I think if you do that successfully in the next 3 to 6 months, I think you can make a lot of money. That's it. That's all I got. That's my piece. That's my thesis. If you're currently trading the markets and you're shit and you need some help and you want to do some auditing, check out your trading plan, see where you're going wrong. We've got a whole community. People are locked in for the bull market. We've been talking about it for weeks, months, actually, not weeks. We've been talking about it for months. If you need a community, you know where to find us. As always, links in the description. I'm going to post some more of these market update videos because I think they're quite informative. Explains a little bit about what I'm looking at, etc. So I'm going to post some more of these. And with that being said, that's all from me. Have a wonderful week ahead. Happy trading. Lock the fuck in and let's get it.